Hey guys, welcome to another Trade Genius podcast. I got my good friend Bob Kudley here, and today we're going to talk about liquidity. You need to know where it's going, and it's not going up. Let's dive in.
Trade Genius.
So as we were saying, liquidity is going to be an issue here for the markets. Bob, you cooked up a chart here, similar to what we've seen in the past with net liquidity, but let's talk about it some more.
Yeah, people ask me what job we should get in the future. I say we should get into alligator farms because that's all I see anymore is alligator jaws between what should happen and what is happening. And the global liquidity has, I think, a 9.91 correlation with the stock markets around the world. I know it affects Bitcoin with a delay, and I think we're seeing that here also with the S&P 500. And we've not had it this wide in a long. In fact, I don't think we've ever had it this wide. And so I think this is the power of derivatives, and those derivatives have to roll over. And yesterday we showed you guys a chart of the put call ratio going into the floor is that fuel tank is empty, and we're running into the next 4 to 6 weeks of a bearish environment for the market where they can reload for option selling. And I think we're going to probably see this thing snap shut. Remember, with Trump, with Doji, okay, he is going to be sucking liquidity out of the entire world here. We're hearing now up to $1 trillion, and maybe that stuff going offshore. So, we may have domestic liquidity issues, but we're going to have also international liquidity issues. We're going to be ending a war with Russia and Ukraine, and all that's going to serve as a deflationary backdrop. And I don't think the markets are going to be able to maintain its elevation with all that flying in its face, Phil. So I thought I just want to remind people is that if you're long, you better be dancing, because at any point in time, we're going to get a pretty big push down. Remember, they close these things so fast that you don't even have time for disbelief. So you need to be prepared ahead of time.
Yeah, if you look at the last two times, and there's another one too, kind of around the great financial crisis. It's just kind of a phenomenon with the modern markets. They tend to dislocate from the liquidity flows. And when I'm been asked like, well, why does that happen? You got to understand, like, there's so much leverage, and like Bob said, when you get the option flows going, it kind of creates its own little universe for a time. But once those flows break, you break the underlying. It's like a feedback loop. And once you break that feedback loop, that's when it starts to then catch down to where your support is, which typically is these liquidity flows. So you can have these dislocations, and oftentimes toward the end of a move, we see these dislocations. And you can see on the chart there on the left, 2018 was dislocated for a while, and as Bob said, it corrects very quickly. You get back down to what we would consider fair value. You basically had the COVID pump, out of the collapse there. But again, it was another situation where we had alligator jaws. So at the end of 2018, we had a bit of a little crisis going on. The reverse repo window open helped sustain the markets back up before COVID, but again, it created another alligator jaw type move, and if it snapped back down. So basically, to get back to fair value, we're looking at about a 2 to 2,500 point drop in the S&P 500, which is pretty substantial. That would just get you back to fair value, and then typically we see us go under fair value by a bit. So there's a lot of air under this market right now, and unfortunately, there's not enough liquidity. And again, this is just a cyclical thing. Liquidity comes, liquidity goes, but you have to be understanding that there's a lot of air under us, and so when the drop does come, it could be quite substantial.
Yeah, and let me explain how it works with the derivatives. So you have an environment now where people are like pushing the market. So they're buying calls, which are forcing the market makers to be protecting because they have to sell the calls. So when they sell the calls, they have to protect themselves by buying futures. And as these contracts roll every week, with the enthusiasm of the price action, you get even higher open interest, and it becomes a self-fulfilling prophecy until you get to a point where there's lower open interest. And when that happens, and also at the same time, the market makers are saying, look, I might be dumb, but I'm not stupid. I'm going to be repricing my options higher and higher and higher. It gets to a point where it doesn't make any sense for you to buy the option anymore. Then all of a sudden, everybody becomes an option seller, and then the market makers are able then to short futures. And I think, those things you got to keep watching. You keep watching these every time you have a rollover of contracts, every week, where even the third week of the month, because that's when these things tend to really hit pretty hard. But Phil, I want to show you something else too, and not the chart so much. If you could bring the attaboy up first. Yeah, I don't want to get into too much of details here, but we had training in San Clemente where we launched our super histogram, Phil, as you know, because you were with me, and somebody was there fairly new to the service, but highly technical person, and they went took our system and back tested it, and just loved it. I'll let you guys read it for yourself here. He tweaked a little bit around rules for themselves. You know, this is designed for you to customize the your own exits, if you will, and it turned out to be really, really good. So when I got it, I said, I'm going to apply his methodology to a chart from last night and to see if it is indeed as good as he says it is. And so here's 3 trades from last night, Phil. And the vertical bars is when he said he would be notified of a pending trade, and where it turns purple shading is when he actually took the trade. And I measured the gains based on where the oversold triangles hit, if you notice, or a change in the vol stop. And you had 3 trades there, and it's too small for me to see, but I think you can live pretty comfortably just on those 3 trades if you got those every day, Phil. So guys, this worked on ES 5 minutes. It could work on any time frame. I personally use the histogram on the 15-minute, hour, 4-hour, depending on how volatile the stock is. And I think you guys will like it. If you're in the VIP room, this is part of the service. If you're in the ETF room already and you want to upgrade, you just pay the difference between the 2 rooms. And if you just want this signal and you don't want to be in any of our rooms, you have to $279 is the price, and you just hit us up at tradelikeagenius.com and ask Matt for the super histogram, and that's what you get. Then if you want to get in a room, you just upgrade to get to the level where you want to go. But I thought I would share with you guys. Pretty cool. I mean, we got this yesterday and I applied it right away. I'm like, damn, pretty good. And so depending what you want to do, it's a good tool, and here's just some quick proof. And so I thought I'd share that with you, Phil.
Awesome. If you guys want that, is it available on the site?
They just have to call in now. I'm going to put it up as a product. People have been asking for it that aren't part of the service. So I'm just sharing the price now, and just ask Matt. He'll get it done, and then we'll productize it for the future.
There you go. All right, guys, thanks for watching. If you have any questions, post them below. We'll get back to you, and we'll see you guys on the next video. Take care.
Trade Genius.